All right, guys. Good morning. Back for another Money morning episode. What's going on, Andrew?
Good morning, Richard. Same old. It's a Saturday morning. It's
Saturday
overcast.
morning.
It's getting cold.
Winter has come. So this is a cast today, dispensing some advice on bank accounts, and I know this is something you come across in the office, so it would be a good topic to cover. Personal versus business bank accounts and why you want to separate them. The floor is yours.
Yeah. Well, we see things regularly in terms of what individuals and clients are going through and how they operate their finances and their banking. And it was over the last couple of weeks, we had an inquiry from an individual or individuals plural. There are a couple who are operating their two business accounts collectively with their checking account. So they're trying to operate three separate entities, which is one business, business number two, and then personal, all together in one checking account. And they were unable to really determine what their incomes look like because they're self-employed. And there's like, well, you know what, sometimes we have better months than other months, so we don't really know how much money we have to generate. And it was an issue because we have to ensure that they qualify for our program in terms of financially, that they have the income to support the requirements to get themselves out of debt. So we had to go through a deep dive, and these types of examples that bring to light that people need to operate separate entities when it comes to finances. They need to know what their personal lives are looking like. They need to know what their business lives are looking like, and that's why I wanted to do a topic on the importance of splitting personal and business accounts.
This is just general banking accounts, not even credit cards.
Yeah, this is just general, like everything in general in terms of keeping your business transactions separated from your personal transactions.
How long were they running the business for?
Well, there's two different businesses. One of them, I don't know specifically how long each one of them have been operating, but they said that the bank that they primarily were banking with froze their business accounts because they're in arrears on their business products. What they started doing is putting all their business incomes, so e-transfers and checks or whatever it is that they were getting paid, into their personal account, and then just operating all their expenses out of their personal account. And they've been doing that for a while. Like when I say a while, I'm talking probably about a year. And I thought to myself, you can't differentiate between your personal and your business. Like one thing that you need to know as a business owner is, how's your business operating? Is it operating at a profit? Is it operating at a loss? If it's operating at a loss, there's no point in continuing to run the business. So if you're running your personal, or if you're running your accounts all collectively together in one facility, one checking account, how do you know if that business is making money? Why would you be throwing good money, meaning your own personal money, into the business if it's not generating any revenue for you, or if it's not generating enough revenue to cover its expenses? And you don't know.
Were the businesses incorporated so that they're separate entities from the proprietor?
No.
So for those of you that are watching, guys, like there's different business structures here in Canada. There's a sole proprietorship, there's a partnership, corporation. Generally speaking, if you're running a business and you want proof of concept, right? So I mean, you want to see that people want your service, meaning they're willing to give you money for whatever it is that you provide, a product or service, let's say. Most accountants would say, and I think I would definitely get my main accountant to agree with this, that for the first 3 to 6 months, not a big deal. I mean, if you want to blend it, fine. But as soon as you've got a proven model working, and that should happen reasonably early in the business life cycle, meaning like people definitely express strong interest for your product or service, then you need to incorporate the business and then create its own bank account. The reason why most people get lazy, I think, Andrew, is because it's a lot easier just to start running credit cards and debits and credits through your personal account because it already exists. And to open up a business account, you need articles of incorporation, which realistically doesn't cost that much to set up. I mean, you can set up a business for less than $1,000 online, incorporate it, and you're pretty much good to go. And you've got a business banking account. As soon as you got cash flow, you can set up like an investment account where you can invest in the stock markets or bonds or funds or ETFs, with any cash that you have sitting on the side. You definitely want to separate them as early as possible. If you're running a business for like a year or two and you're blending your personal with your business transactions, you're really just complicating your life unnecessarily. It's really not a very good plan.
Yeah, and that's exactly it. Their budgeting and their lives were complicated. They didn't know what kind of income they had. They didn't know what kind of expenses they had, and they would certainly know these things if they had separated their entities and they knew which each business was doing and how much they were generating from those businesses and depositing into their personal bank accounts. So it is a serious requirement to ensure that you're keeping your entities, your business and your personal separated.
I think we've covered it because I mean, it's like, when do you know to separate them? As soon as you know you have a viable business. I mean, if it's a hobby, you're probably going to stop doing it. Like if you're switched on, there's some people that run hobby businesses for a long time and, they do stuff like this and then they wonder why they went, end up in serious debt problems. There's no two ways about it. You don't blend personal and business transactions for prolonged period of times. Again, proof of concept, first few months, you want to make sure it's working. People want what it is that you're offering. As soon as you have proof of concept, incorporate the business. It's very cheap. It's very simple. I mean, you can practically do it yourself, or you can have an accountant do it for you. And like run your transactions through the business account, and also run, like, if you have PayPal for processing or Stripe, or you have a credit card, run it separately through that business account. It's not difficult. It's like basically all a corporation is just like saying, hey, there's Rich Cooper and then there's Rich Cooper Inc. They're two separate entities, right? I mean, you're going to call the business, whatever you want, obviously, but they're two separate entities. The other thing with that too is you've got liability,
Yeah.
right? So I mean, if you're running a business in your personal, business account, and one of your customers, a vendor, a provider, a supplier, whatever, decides to sue that business, guess who's on the hook? You are personally. And if you have a house and they sue you personally because of some silly choices in your business, they can place a lien against your house, right? That's one of the other benefits of getting a corporation and setting them aside, not just for the credit and debt issues that Andrew's talking about, but it's not very hard or as impossible as a lot of people think, but it just makes it more difficult for a litigious plaintiff, meaning somebody that wants to sue you, to pierce the corporate shield, right? So there's lots of benefits to setting up a corporation. You should definitely do it.
Yeah, and I'm not only just talking about credit. The checking account, so the operating account of your personal account and your business account. I'm also talking about credit products. So that means your purchases for your whatever it is that you're doing as a business. So if it's material, if it's gasoline for filling up of your vehicle, whatever it happens to be, you should be putting that on a business credit card in the business name. And then when the bill comes due, you pay it out of the business accounts. It's because it's business liable. It's not you personally liable for that product. It's the business that takes care of it. And that way, for sure what kind of revenues the business is making and what kind of expenses that business has. So that way you can determine if you want to continue operating the business. Most people with common sense would not be continuing to operate a business if it was suffering a loss year after year. And unless the loss is very minuscule, like $100, $500, whatever it might be, if it's enjoyable and it keeps you busy and you just enjoy what you do, then I can understand you want to keep that business. But if you're losing money and you're losing money, there's no reason to continue to operate it. If you're taking a loss, you need to know you're taking a loss. You got to close that door down and you got to reopen something else, because it's just not working. And that's why we're saying, and that's why I'm advising that you need to keep the business and personal transactions completely separated.
All right. Let's throw the ticker up and say goodbye to everybody. So as far as what you can do to help them, Andrew, so if they've got $15,000 or more in unsecured debt, overdraft, line of credit, credit cards, anything that's not collateralized with with a real asset, you can help them out with that. So the ticker's below there. You just go to totaldebtfreedom.ca, fill out the form, and the office will be able to quote you on how to get the debt legally reduced by 50 to 70% and get debt free. It's usually on average of about, anywhere from 3 to 5 years. Anything else you want to add to that before we wrap up, Andrew?
No, that's fine. Yeah, that's it.
All right. We'll see you guys next Saturday morning at 9 a.m. Again, if you have a topic you'd like to see us cover in a future show, you can absolutely positively drop a note and let us know. We got a quick question there from Ruthless Viking, who says, is it useful for taxes too? If you owe money to Canada Revenue Agency, and again, guys, Total Debt Freedom is a Canadian company, so we only deal with Canadian debt. So if you have IRS issues or something like that, talk to a tax lawyer or a tax accountant in your country or city that you're in to get proper advice or guidance. But here in Canada, do you want to speak to that about taxes, Andrew?
Well, I'm not too sure if I'm understanding the question. If he's wondering,
I think
keeping
he's
your
asking if there's taxes owed. Like if you owed 50 grand to Canada Revenue Agency, or you're not paid up on your
oh,
GST or
okay.
HST.
So our service. So is our service relevant to taxes? And the simple answer to that is no. It's extremely difficult, if not impossible, to convince the government to take a significant reduction on what you owe to them. If you owe them whatever amount of money, $500 upwards of $50,000, you need to make your own personal arrangements with them on a monthly repayment schedule. $100 a month, $500 a month, whatever it is that your budget allows you to offer to them on a monthly basis. And if you do not have the ability to do so, and the amount of debt is extreme, we're talking over $35,000 to $50,000 plus to the government, you may want to consult with a bankruptcy trustee about either a consumer proposal or a bankruptcy procedure. It's not ideal, but those are probably something you might want to consider if you owe that kind of money to the government.
Yeah, just to kind of expand on that before we go real quick, because you're the licensed legal professional in the office, Canada Revenue Agency's debt is not subject to the Limitations Act. It's owed forever, right?
Yeah. So there's no limitations on when they can collect it. There's no requirement for them to bring a claim against you in a court of law to obtain a judgment, which allows them to enforce with a garnishment or a lien on your property. If you owe the government money and you have not made arrangements that are satisfactory to the CRA, Canada Revenue Agency, to repay that, they will at some point commence garnishment of your income, and they may or may not, depending on if you're a homeowner, place a registered writs, which is a lien against your property. So that's why it's extremely important that if you owe them some money, regardless of the amount, you contact them and make satisfactory arrangements that you can afford and that they're also willing to live with. So that's why I'm saying a few $100 a month will keep them at bay.
And I think they normally still, to pay off any debts that's owed to Canada Revenue Agency, I think the easiest way that they start to collect it is they usually lien your taxes, right? So if you have a tax return coming, then they just scoop it and they just pay it down towards the debt without your permission.
Yeah. So if you owe money and if you have a credit on your income tax return for the year, they'll just offset it and take it and apply it to the debt.
Yeah. Yeah, you pay all those taxes, and at the end of the year, you file your return, hoping to get your 12 grand back, not knowing that they're going to take that 12 grand and apply it towards the Canada Revenue Agency debt. So, if you have taxes owed to the government, your best bet, if you're not able to strike up a deal or work something out, generally speaking, if you can work something out first, it's probably your best bet because they don't charge a lot of interest.
I was going to say that, yeah.
If not, just file for bankruptcy. A bankruptcy trustee will get rid of it for you. All right, guys. So again, if it's unsecured credit card debt, business debt, lines of credit, anything that is not collateralized or government debt, taxes owed, for example, check out the office at totaldebtfreedom.ca. We'll see you guys next Friday. Not next Friday.